Hello traders, and welcome to this week's Market Outlook from Exness. I'm Michael Stark, Financial Content Leader, and here I'm going to be given an idea for a trade over the next few days, the narratives that might drive the possible movement, and what traders who were to take the position would need to be aware of in terms of news and data. Before that though, let's look back at the performance of last week's idea. Last week we had a mean reversion idea for euro-pound from the area of around 87.5 pence with a possible target of about 86.85 pence. So far the idea has not been successful as the pound has lost some strength, but we'll continue to monitor it and see whether it might reach the target within the next few weeks. This week the idea is a possible buy for gold. We can see that gold was in a very long-running and strong uptrend for an extended period, and now has retreated somewhat from the previous highs and is currently within the value area between the 20 and 50 simple moving averages. What traders might look for confirmation of the idea to buy is a coil within this value area and a possible move up in terms of saturation indicators, whereas if the price were to extend significantly lower, this would probably invalidate the idea. The initial target might be the area around $4,150, but it might be possible in the further future to see the price moving up even higher, possibly all the way to 4,300 or higher. One of the primary narratives that drives or could drive the possible movement upward by gold is the lower expectations of dovishness from the Federal Reserve. After the recent meeting of the Fed, where Jerome Powell downplayed expectations of another cut in December, we can see that the probability of this happening has decreased to only about 65 to 70% when it had previously been more or less certain. Another important factor that generates uncertainty and possible instability which could benefit gold is the ongoing government shutdown in the USA, which means a lack of economic data and so certainty for many markets. This week it's very unlikely to receive the scheduled NFP due to the government shutdown in the USA, but traders will look at Purchasing Managers Index and Michigan consumer sentiment instead. In summary, the idea for a trade this week is a possible buy for gold from the area around 4,000 with a possible target around 4,150, perhaps higher than that in the further future. Primary narratives driving the possible gains by gold are the greater expectations of relative hawkishness by the Fed and the ongoing government shutdown in the USA. This week, with various data very likely to be delayed, traders are focusing primarily on PMI and sentiment. Please remember, this is just an idea for a trade. It's not a signal, it's not a guarantee of success. You should always do your own research and manage risk.